Texas is now the first U.S. state to allocate public funds for a state-managed BTC reserve.
Hong Kong has their approach to this industry is they want tools to strengthen Hong Kong's banking industry because they want to become global financial hub that can rival the likes of New York or London.
This material is for informational purposes only and is not intended to provide accounting, legal, or tax advice, or investment recommendations, or an official statement of Presto or its affiliates.
Hello, this is the Presto Research Podcast. Another week, another podcast with Rick and Peter. What's up, guys?
Hello.
Hey, Gio.
So this week, we got some more news. People aping into Bitcoin, especially this case was Texas, where the governor seemed to sign the law earmarking a $10 million purchase for BTC. I think Rick has some things to say about it.
Yeah. So to introduce what happened and why it's important, Texas is now the first U.S. state to allocate public funds for a state-managed BTC reserve. So I think we've seen in headlines things about Arizona and New Hampshire, but what the difference is and what sets Texas apart is it's the first time a state has committed actual public funds. So this is done by signing the Senate Bill 21, SB 21 into law, which sets up the state strategic reserve, and then the commitment followed. The commitment, like you said, is $10 million. And there's a potential to increase its allocation up to $250 million in the future. Potentially pretty big number.
Yeah, considering that, Meta is poaching OpenAI employees with like $300 million, buying $10 million or $200 million of Bitcoin seems to be a very low number right now. Do you see potentially Texas, since they're a very big state, do you see them buying billions one day?
I guess potentially. And Texas stood out as a crypto location in the US, I think quite early on, like years ago, when they started doing, just like Canada. I think Canada started it with using natural resources, energy resources that were being burnt unnecessarily as part of the extraction process, using that for Bitcoin mining. So there's been a somewhat crypto-friendly backdrop to Texas from a while ago. So maybe, it's 10 to start off with a 250 cap, but that can potentially grow as maybe other states join in, hopefully.
So the upper limit is $250 million.
Yeah. There's a potential to increase it to 250.
Right. And do you know how big is their overall reserve size is?
I think, yeah.
So the overall budget is $25 billion. So I mean, 10 million is tiny. So if you do 250, that's more than 10 times, about 20 times. So that becomes 0.04. Still less than 1%, right?
Yeah, definitely still less than 1%. And they have a requirement, a criteria for it. So the cryptocurrency that they'll purchase has to have maintained an average market cap of over 500. So as of now, only one fulfills that criteria, Bitcoin. Maybe there's some signal from the overall size of the industry that would nudge them to push this number higher. I'm not sure where they chose 10 to 250, but let's say there were multiple coins that fulfilled the criteria. Maybe that will help them increase that exposure.
Yeah. I mean, I think it's good news and it's a good start. I don't know, why it's taking longer for Arizona and New Hampshire to actually execute the plan, because they already approved the bill, right? So maybe they're in the process of
and it seemed like they were going to lead the way, but evidently not. And then there was that thing this morning, I think overnight, Connecticut banned the state or the governor signed in to ban creating a Bitcoin reserve or investing in any digital assets. So
right.
I guess as a whole country, it's still pretty divided amongst the states, how they do crypto.
Yeah. That was really interesting, actually, that the Connecticut was banning it. I mean, you could at least just not do anything, but they actually went out of their way to pass the bill.
For such a like an investment focused state, like finance focused state, it seems like a very weird thing to outright ban the state itself, like touching it, because like you said, you can just not do anything.
Right. Yeah. Yeah. But I mean, I think there's still a bunch of states that are still in the process of reviewing the bill, right? Maybe we'll get more states than just those three. But yeah, I think it was a good piece of news.
What I was expecting was, I mean, not expecting, but what I am expecting right now is these guys just buying my bags and we just all go to Valhalla. I mean, it's becoming a reality at this point. So I think it's a question of when, not of like, whether it will happen. So I'm pretty stoked. And talking about people buying our bags, I think we have some more news here where I think it's Fannie Mac. I've never heard of these names before because I don't know anything about finance. And it turns out this is supposed to be some big news. So Peter, why don't you introduce this topic?
Yeah. So the news is that the director of a federal housing finance agency, abbreviated as FHFA, the director there is somebody called Bill Pulte, and he apparently ordered that Fannie Mae and Freddie Mac to consider crypto assets as mortgage assets. Now, I think so. A little bit of a background info is needed here. I think Fannie Mae and Freddie Mac is these are the so-called government-sponsored enterprises, and what their main role is, without getting into too much details, their main role is basically buy housing loans from banks and turn it into a mortgage-backed securities, mortgage-backed bonds, and sell them to the investors. And they were created, I think, in the late 70s, and that's how this entire so-called MBS market, mortgage-backed securities market, started. Now we have all kinds of assets being securitized, but they were the first to do so. And the idea here is that by doing so, banks can unload those assets into the fixed income market, and they have more room on their balance sheet to extend more loans to more borrowers, more housing purchasers. So that is the idea. Now, I'm not sure what the mechanics are here, but why it has to be directed towards Fannie Mae and Freddie Mac instead of just directly, like OCC ordering banks to consider crypto assets. But, just putting that aside, I think what's happening here is that basically this guy, Bill Pulte, is saying that, look, guys, when you evaluate these mortgages, make sure that you consider whether you can include crypto assets, not just the traditional finance assets, but also crypto assets as part of the risk assessment exercise. So right now, I guess, when you evaluate a borrower for their credit risk, you look at what they have on the asset side, and you have what they have on the liability side, just like any other lending exercise. And on the asset side, you look at maybe typical individuals, would have a house as maybe the biggest item on their balance sheet, but then maybe have some stocks and bonds and mutual funds. But I guess more recently, maybe the younger generations would have Bitcoins and other crypto assets. And basically, what he is directing is, think about whether you can include these crypto assets as part of their household's balance sheet. And so it's not a done deal. So they're looking into it. They may not do it. But I think the fact that they've come this far to even consider crypto as part of the mortgage asset, I think is a big deal. But I think there are some little details that you have to be still kind of mindful about, and that is that when the lenders evaluate these assets, they have to obviously assign a value, right? And if they are stocks, for instance, they give a little bit of haircut to the market value. So, let's say somebody has $100 worth of Tesla stock. Instead of valuing it at $100, the lenders would value it at something like a 70%, like $70, for instance. And the reason for that is because these are volatile assets, and price fluctuate, and therefore you consider all that possibility, and that's why you value them more conservatively at maybe 30% discount to the market price. So in the case of a crypto, if you apply the same principle, maybe you want to give it a higher discount or haircut. Maybe it's as large as 50%, or who knows? They'll probably come up with some number. So depending on how deep the discount is, maybe this may not necessarily help the borrowers so much, right? So that's something to be mindful of. Another thing is now there are some people who, I think as soon as this news came out, I think some people on the Twitter start to like sending these memes of the scene from the movie Big Short, where I think like some people like mortgaging their Fartcoin to borrow money to purchase house, and therefore this could be something that could trigger another housing crisis or something like that. And now I think that it's funny. It was funny. I liked it, but I think that concern is a little bit overdone, because the way that these risk assessment works is it's different from like you borrowing money to purchase stocks. When you borrow money to purchase stocks or any kind of margin trading, your position has to be marked to market, and if the collateral value falls below a certain level, then you have to puke out additional margin or liquidate, right? But in the housing market, that's not how it usually works. I mean, I think it's a little bit different from country to country, but usually in most countries, it's usually the banks will assess the value of your collateral at the time of making the loan, and after that, it's all about just meeting the monthly mortgage obligations. So it doesn't matter what happens to your collateral value after you borrow the money. After you borrow the money, collateral value can collapse like half or even more, and maybe you're under negative equity. But if you can meet your monthly mortgage payment, then the bank will not liquidate you. So I think people who are sending out these memes are either don't know this or just trying to be funny. But so yeah, these are some of the comments that I'd make about this news.
Yeah, probably people just don't know it because I think this crypto bros like me have no idea how these type of things work, and I truly resonated with that meme because I thought that would be a possibility, because they said, why don't we consider having assets that are listed on US regulated exchanges as, these assets that could be potentially be used for credit evaluations. So yeah, but one thing I was curious about this thing was, do these people actually mark up the value of assets that you own sometimes? Because all I see is just haircuts, but we're seeing like these states buying Bitcoin. Why don't you mark up Bitcoin's value when you evaluate the value of it?
Yeah. So, I mean, I think you're talking about two different things. I think when the state government or any government buys Bitcoin or other crypto assets and put it onto their balance sheet, they're not really leveraging anything. They're just putting their excess cash or reserve into these assets. So you can just you can market to market, just like MicroStrategy are marking to market their Bitcoin holdings because it's not really pledged as a collateral for anything, right? So no problem marking it to market. But in the case of using your asset as a collateral, you're actually pledging it as a collateral to borrow money from someone else. In which case, the lender, prior to making that lending decision, they will want to be more conservative, and that's why they apply the haircut. So, you're talking about two different situations here, and depending on what situation you're in, you may or may not want to apply mark-to-market valuation or something else.
Yeah, because it seems like pretty unfair to people when they always just, do haircuts to all assets. Like, of course, it's a business, so I don't think they want to mark up a value of an asset that they may want to lend money to. So yeah, I was just thinking because hot air rises. Rick, do you have any comments on this matter?
Not really. There's probably a formula though that takes into account like average return and volatility for the haircut amount that if they probably won't release, but if we did see it, would make some sort of sense.
Yeah. Seems like they only have like, if the volatility is that high, then I guess well, our Fartcoin's not very useful in this case. Though I mean I mean in the future I hope to see like people really borrowing money to buy a house with some ridiculous coin. And that could be it's not totally, not unrealistic at this point, cuz like Trump and his family and like the whole crypto alignment of this whole timeline is going. I'm not like rejecting any type of possibility at this point. So yeah, let's see how this goes in the future. All right. So the next topic, we have some things about Hong Kong, and Peter, you're the expert matter on this one.
Yeah. So I guess the news came out late last week. The Financial Services and Treasury Bureau of Hong Kong government, which I think is similar to Treasury, Treasury Department in the U.S. That they released what they titled Policy Statement on Development of Virtual Assets in Hong Kong. This would be the second kind of statement issued by Hong Kong government on their, so-called game plan for how to kind of nurture the crypto industry in Hong Kong. And the first one came out in October 2022. There was a very comprehensive one back then. And so this one is a slightly shorter version, but maybe a little bit more additional updates on where they want to take this industry to. And it's, there are a lot of details, actually. They covered a lot of topics, but there are three things that stood out, at least from my perspective. First one is they said that big part of this statement was actually spent on talking about what a good job they've done so far. So that's kind of interesting. And then the other parts where they're talking about like where they want to take this industry to. And then one of the things is they want to boost or upgrade the AML and CTF standards. The CTF stands for the counterterrorism financing of a licensed crypto businesses, primarily virtual asset exchanges, the crypto exchanges, to the level of traditional finance institutions. And the reason why they want to do it is to kind of facilitate the integration of the blockchain industry with the traditional finance industry. And so what I got from it is that maybe this has acted as a bottleneck. Maybe there was a pushback from the traditional finance that they having a difficulty, or they're unwilling to integrate with crypto firms, because maybe the crypto firms, AML, KYC, CTF kind of practice is not, in their view, maybe up to the standard. And maybe this was, this statement was reflecting that kind of concern. So, maybe I think that these crypto firms need to invest more to upgrade and boost their, AML practices. Second thing that stood out is, they talked about how, crypto assets are becoming more mainstream and would like to provide more access to the public. And then they talked about ETF. So from that, what I got is that they already launched Bitcoin and Ethereum spot ETFs, although has not been as successful as people had hoped, because the AUM is still not very big. But maybe this means that there's going to be more. So already in the US, I think there's rumor that it's not a rumor anymore. In the US, the Solana ETF is going to get listed tonight, I think. So, already US is moving to launch other types of, crypto ETFs, and Hong Kong wants to catch up. And then lastly, the stablecoin, of course, the buzzword. It's unbelievable the amount of kind of questions I'm getting these days from people outside the crypto on stablecoin is just went up 10 times. But anyway, so of course they will have to say something about stablecoin in this statement. And what they've said is that now that they've passed the stablecoin bill, maybe in case you didn't notice, Hong Kong lawmakers passed the stablecoin bill, I think about a month ago. So ahead of the US. So far, we have not seen any kind of a huge amount of kind of action plans coming from the crypto industry yet. There has been some headlines like I think there was a headline saying that Alibaba is going to get involved in this space and so forth, but not in a major way. So what this statement here says is that the next step for them to promote adoption of stablecoin is to address to set up a regime for regulating activities related to payment-related stablecoins, quote unquote. So I guess what it means is that the stablecoin bill was about issuance, and government now realized that apart from the issuance, they need to kind of provide the regulatory clarity or framework for how the stablecoin can be utilized on the payment as a payment means. So I think the statement is trying to say that that's what they're going to be focused on going forward. So yeah, I mean, these are the three things that kind of stood out to me. And like I said, Hong Kong has their approach to this industry is they want tools to strengthen Hong Kong's banking industry because they want to become a global financial hub that can rival the likes of New York or London. So blockchain is that tool that they viewed, and therefore they're actively trying to incorporate this technology into the mainstream finance, and so that's I think kind of one of the differences that I see in terms of how Asian governments are trying to deal or handle this new technology. Whereas, like if you look at other jurisdictions in Asia, notably Korea, their view is entirely different, right? Like they're actively trying to somehow prevent this technology from entering into their territory because they feel threatened or they feel they haven't figured out what to do with it. So that's a very big difference, I think.
Yeah, even I think this morning I read something from the Bank of Korea, the head of Bank of Korea, saying that allowing stablecoins can cause our capital to flow outwards. So I'm pretty concerned something in that sense. And when I see Hong Kong, it's traditionally a powerhouse of finance. They're moving fast, so. I think Korea and Hong Kong has a very different approach, what I've heard. And let's talk more about Hong Kong, though. You know how in Korea, when everyone was talking about stable coins, like these certain stocks just flew. It just became a meme stock at that point. Kakao Pay, like these certain stocks like went up a lot. And I was wondering if that same thing is happening in Hong Kong too. Do you see like any like Hong Kong companies or some Chinese companies stocks appreciating due to these stablecoin narratives?
There was a little bit of that. There was one local brokerage firm whose stock just like went up 10 times in one day because there was a headline that they obtained a license to handle crypto assets. So it didn't really specifically say anything about stablecoin itself, but just because the company is somehow now viewed as someone who can handle crypto. And I think this coincided with this buzz around stablecoin. I think the people in the public equity market was just actively looking for, the next hot stock that can do something similar to what Circle's stock did after the IPO. And they just made up a story and then just bought it.
They just made up a story.
Yeah,
that's the funny thing.
Yeah, so I mean, so this is very interesting, right? So I think, like what's happening in the public equity market after the Circle IPO is really funny. For one thing, if you look at in the crypto market, none of the stablecoin related tokens are really doing much. They are not really rallying or anything, right? Ethena or all these the Maker now. What's their new name now? It's a Sky or something, right? None of them are really doing much. But if you look at the public equity market, the minute you spit out the word stablecoin, like they all like flying. So all this hype about stablecoin, it seems to exist primarily outside the crypto. I mean, it exists inside of crypto as well, but it's not like so much about like a token prices. It's just the industry players coming together a way to like build stuff. But in the equity market, public equity market, it has become like a meme-like a phenomenon. So that's one thing. Yeah. Sorry, go ahead.
Seems like the mere association with crypto just pumps your stock a lot. Like, what was this company? Like this company that was buying Hyperliquid? Like their stock also went up
Oh,
phenomenally.
yeah.
And
That's a little
you
bit
know,
different. That's a little bit different. That's like that's the Bitcoin treasury company kind of
yeah,
theme.
but like
Yeah.
it seems ridiculous to me that just buying a little hype just pumps your stock like that, and everyone's just buying it. Like it just seems like why don't you just buy Hyperliquid if you have the time to actually buy this stock that pumped like 1,000% overnight? It's I don't think it's I mean it's kind of different, but the association with crypto seems to be such a bullish catalyst for a lot of people in the stock market.
Yeah. I think that's what happens when you see something going up a lot, but you don't exactly understand why, and it's from some new emerging field that people find it difficult to wrap their heads around. Just blindly chase these assets, and it's a type of thing that drives a meme coin mania in the crypto industry. But the same kind of dynamics exist in public equity market. So in fact, you can say that people make fun of crypto industry when meme coin rallies and they all trash. Everybody outside the crypto industry trash talk about that type of thing. But that type of thing has always been with us over the last 100 years in any type of asset market. So yeah.
So here's a question. You know how Robinhood and like these on-chain stocks are like, people are just talking about nonstop. Like they're saying, oh, if you're in crypto, you should buy this actual stock of Robinhood, Circle, or like Coinbase. Like, buying alts and holding them is now worthless. You shouldn't do that. And now alts are just doomed because these alts have no intrinsic value. So maybe this cycle, maybe like the next 1 or 2 years, we're better off to just buy and hold crypto related stocks instead of alts. So what's your opinion on this one? Would you buy and hold stocks against altcoins? I want to hear both of your opinions on this.
Well, so the argument is that play crypto through equities rather than tokens.
Yeah, basically.
I don't think it needs to be exclusive, a mutually exclusive thing. I think it's not a binary decision. I don't think, like just because it's a crypto related equity doesn't mean that everything's going to go up. I think some of them are very risky, I think. Whereas I think also in the crypto market, just because it's altcoins, it's not going to be successful. I mean, granted, I've always maintained the view that the 90% of altcoins are not going to make it. But I think some will. It's very, it's challenging to identify which one. But I think you can find some good ones if you are lucky and do proper kind of due diligence. But so my view is that it's dangerous to approach it as kind of a binary decision, in my view.
Yeah, but I was just trying to think about the hypothetical. Like, if you had the choice, I mean, if you had to choose between equities or alts at this point, what would be your choice?
Yeah, okay. Well, I mean, like with the alts, like I said, I think having a small position is okay. Maybe less than, if your total crypto position is 100, maybe less than 5% in alts. With the equity, I mean, I think if it's a crypto treasury operation, like MicroStrategy or somebody who's trying to be like a MicroStrategy, then maybe I think it has to be listed in the US because one of the key driving factor for these companies' ability to issue instruments into the traditional finance market, like a convertible bonds or equity. And I don't think any markets outside the US has liquidity that is deep enough to digest and investor base that is willing to provide a capital for that type of operation. So I think that's also another important thing. Also, it has to look at who's running the show. I think it has to be somebody who knows how to navigate these public capital market, and some are better than others. So you have to make sure that people who are running the business, especially like the CFO CFOs, who the CFOs are, because it's not always easy to structure these instruments in the right way.
Rick, what's your opinion on equities? How much would you hold?
Well, to answer your original question that Peter was trying to hedge, you can tell Peter's an expert salesman. Is the extreme hedging on both sides. I would do equities. I reckon equities would probably have a better filtering mechanism of the BS stuff, and a higher percentage of alts now would underperform or just go to zero. There was this tweet today by Ash. He did some research, so I'll read it out quickly. So we're halfway through 2025. 56 VC-backed tokens have been listed. 45 launched between 50 million and 1 billion FDV, which is a big range. 8 are below 50 million, and only 3 are above 1 billion, sorry. So Kaito, Story, and Walrus are the 3 above 1 billion. So he was saying it's crazy because VCs will usually invest in like a 20 to 100 million FDV, and they're locked for 3 years. Plus the cliff plus vesting. So no, that's a long period to take into consideration. And a lot of the projects are already trading below their last fundraise valuation. So I think when you think about, this topic was like pretty well talked about even last year. And I think Min wrote a piece on this about VC-backed token valuation and stuff. And he's done follow-up posts on it too. But if you consider that side also, so what alts mean now is a lot of inflated valuation stuff, like VCs that did well in the previous cycle, they raised a lot of money, they had to deploy, and so they did follow-up investments in existing portcos and whatever, and they just had these like very unrealistic valuations with no liquidity because there was no token yet, or only like a small percentage of the token was being traded. That side of the alt story, I think, is pretty not promising. So then when you consider the equity side, there's just a better, not always a good, but a better, I think, filtration system of what these with these publicly traded companies do. And if they're sort of like treasury companies, put aside their original business, what sort of tokens they might be holding on their treasury. So Figma, what was Figma? 50 million or something, or 10 million? It was a small amount on their balance sheet given how much cash they have and what their valuation is. But that was, I think, one of the first legitimate companies doing really well. So actually, like, their burn rate or whatever is negative to how much they've raised and how much cash they have. So they're one of the few tech companies that raise money that are doing much, much better than projected and much better than the previous rounds. They had a small in consideration of the asset class and their size of Bitcoin. So, but that was promising because that's a legitimate, remove crypto from the story, a really good business who is leading their field that's been interested in like just holding spot Bitcoin. So I think there's more interesting stories on the equity side because you can combine narratives also, and crypto can be like an additional strength, not the only story. So yeah, I would do equities. I feel like I slightly hedged also, but I would do equities over alts.
Yeah, but one thing what you have to remember is that it's fine people do that, but if you invest in crypto equities, then there's non-crypto side of the business that you also have to be able to evaluate. And I'm not sure whether our typical DGen crypto bros have that ability, to be honest.
Oh, definitely not. Definitely.
Right. Yeah.
But then I think if you think there's some like cash flow, just some cash flow, and that is already beating most alts, so then when you think about like simple valuation wise, there's probably some minimum, or if you think of simple valuation wise, however you want to value crypto, you'll probably get to a minimum valuation given they probably have some hard assets. And then hopefully the liabilities aren't insane. So there's some minimum valuation, whereas you can probably legitimately argue a lot of these alts, the valuation is zero. It's a lot harder, I think, for crypto stuff to die because cults form, and culture forms around coins. And as long as there's one AMM that provides the pair, it's not going to be like delisted fully from public venues like stocks can be. So as long as the company doesn't declare bankruptcy, even if the foundation behind it disappears, as long as there's one liquid, no, it doesn't have to be a liquid AMM pair somewhere, the whole project will have some valuation. So on that side, that could probably look a lot better than it actually is, or crypto can look a lot better than it actually is. I don't want to be too bearish crypto, but bearish some alts, I guess.
Yeah, and when you say some alts, that would mean like 90%, and I know what you mean. And yeah. I think what will really save our alts would be a huge liquidity injection into the system. I think the big beautiful bill, is that the name of it, from Trump? I think that's what he's trying to do. Seems ridiculous to me that he promised all these like cuts and like these talks about budget and all with Elon Musk, and he had this little thing with Elon and he just fired him. Now he's talking about deporting him, and now he's like talking about like getting the guy he wants on as the Fed chair. And this is some serious macro news that I think Peter should be talking about.
Yeah, and then Rick can chime in as well with his views. But so I think there's some emerging group of people on crypto Twitter who increasingly is of the view that liquidity conditions in the second half is going to be meaningfully better than the first half, and there are several reasons to believe that might be the case. The one thing is, as you mentioned, the Trump's tax bill, which promised to spend a lot, at least in the first, in the first early stage of the implementation of the bill, and that's going to release a lot of kind of, because it's going to involve some tax cuts and so on, release a lot of, liquidity into the economy. So we'll see how it looks like the Senate has passed, right? So maybe there's a good chance that it'll go through without too much of a compromise. In which case, I think it's a boost to the liquidity conditions and also sentiment as well. Second thing is it's more kind of I guess kind of technical thing, but the Fed recently changed the rules on so-called the supplementary leverage ratio. What it is basically, without getting into the two weeds of it, into too much details, it's a rule that affects how much of bank's balance sheet can be allocated to holding treasuries, and it was actually tightened after the 2008 financial crisis, and so the banks are not able to take as much risk when it comes to holding treasuries. But I think the Feds recently, basically decided that they're going to loosen that rule a little bit. So some people estimate that it could unlock as much as like $5 trillion in the bank's balance sheet to, accommodate more treasuries. And that's a good thing for the liquidity, right? Because, the treasury market is what really drives the liquidity conditions in the economy. So that could be quite positive as well. And then the last thing is, also actually something that Chu-Hyung mentioned is, Trump continues to trash talk the Jerome Powell, and also there's a continuing headline about who's going to replace him. And I think all these things is maybe it was maybe my own kind of conspiracy theory. It's all intended. I think it's a way that maybe the administration wants to play the media. They want to give expectation to the people that there's going to be a very dovish like a Fed chair candidate replacing Jerome Powell next year, and therefore maybe trying to influence markets' expectation of where the liquidity conditions will be in future. Because when you say liquidity conditions, it's all about the expectation also play a big part of it. It's not just the Fed rate cut and rate changes. It's also the where the bond market trades and all that kind of thing that impacts the overall liquidity conditions. And as the people build up this expectation of somebody very dovish coming in as a new chair replacing Jerome Powell early next year, that can start to influence the asset prices even before he comes in, right? Even before the new guy comes in. So I think that also kind of that could potentially play into this the market expectation of where where the liquidity conditions will be, and all of that kind of I think points towards a scenario where maybe the second half can benefit from more liquidity in the system.
Yeah, I also read somewhere that like 7 out of 10 investment banks said that they're predicting rate cuts in the later half of this year. But also Jerome Powell recently said something that I think it's kind of they are on a solid agreement of cutting rates or something in that sense. And also like they had like, I think he also made like these brief mentions about not cutting rates at all. So I guess like we'll have to see what really happens. And I think the market is also pricing in a lot of these things, even though Bitcoin saw like these news with Israel and Iran, it's still holding above 100K. And like when we look at things, how the charts are being pictured right now, we still have very high, not very high, but like somewhat higher interest rates when compared to 2020 or 2021, and we're still hovering around 100K. So I know like Peter mentioned that we might go up to like 260K or something this year, and I mean that could be 210. Yeah, that could be like a distinct possibility at this point. But I think we need someone to print some more money to make that happen.
If the liquidity scenario really materializes, I don't think it's too much of a stretch. It could happen, very quickly. I think. I mean, if you look at the past Bitcoin rallies in any given year, it's concentrated in a few days. So over the 365 days, let's say Bitcoin rose 100% that particular year. If you look at where the rally actually is concentrated, it's only over like a very few days out of those 365 days. So you don't need like that many days. Like it'll go up like 10% every day for 5 days in a row, and then maybe we're halfway there to the target price.
So I think we got it. Oh, Rick, you want to speak?
I was going to say, I think in 2023, when Bitcoin went up 100 and something percent, if you had removed the top 8 trading days, top 8 return days, it would have been flat. And if you removed the top 20, it would have been down 20% or something.
Yeah. So do not try to time the market. Try to be have low time in the market. Yeah.
Yeah, don't time it. Yeah, that's exactly what I've been saying.
But that's like the most trickiest part. Most people just fold. They don't have much conviction, like me, and they sell their bags too early. But this time, I'm not selling. I'm holding my Bitcoin right now, and I'm holding strong.
We're in stable coins.
Bro, that happened.
I'm like flat right now. So
that's something I want to say a word, but I'm not going to say it because we're on an official podcast here. But
so you're holding on to stablecoin because you're bullish on stablecoin. Is that what you're saying?
Oh, it's gonna pump to $4.
couldn't resist this.
Yeah. But like there's like a lot of talk about like how to spot the top of this market. And since we have been talking a lot about treasury strategies, then what are some signs? What would be these people would be talking about? And one tweet I saw from Udi Wertheimer from the Taproot Wizards was that people are going to be saying that it's mathematically impossible that Bitcoin can dip even 1%. If people are repeating these type of nonsensical comments, then I think that's the point where we have to sell, is what Udi says. But of course, I'm not going to sell my long-term bags. I'm just going to sell my, alts and whatever. But what do you think are some signs you can see to mark the top?
It's really tough, I think. I think when we usually say something is a top, it's usually with the benefit of hindsight. You only know after you're down like 50%. Oh, that price point, that was the top. That's the only way. I mean, that by definition, that's the definition of a top, right? So when you're in the middle of it, it's if you happen to get it right, it's by luck. So I think when it's very tough to pinpoint, but based on my experience, I think I will get a little bit nervous. Like, when I remember in 2017, in December 2017, that's the moment that I decided I need to get into this industry, because I think mentioned this a couple of times in other podcasts, other media, that because I missed an opportunity to like 100x on my small saving, and I just like hated it, because like in December 2017, that's when Bitcoin went from $200, which is a price that I could have got into if I was more kind of not so lazy. And then the Bitcoin went all the way to 20,000, right? So 100x. So at that time, what was happening was like even the media, traditional media like a Bloomberg or CNBC, were nonstop talking about Bitcoin price, like every half an hour. It was just unbelievable that how often they just talk about it on and on and on. And I remember I went to when you get married, like you sometimes have to hang out with the husbands of your wife's friends that you are not necessarily very good buddies with. So you're forced to hang out with them. So I was hanging out with some some husbands, and I don't even know their names. But all they talk about is Bitcoin. All they talk about is Bitcoin. And every time I hear them talking about Bitcoin, it just pains me so much, because like I could be the guy saying, "Hey, guess what? I got in at $200 and 100x." But I couldn't, of course, do it, because I didn't get into it at that $200. So that type of thing. You go around and everybody talk about Bitcoin everywhere you go. I think that kind of thing starts to happen, then I'll be a little bit nervous. Now, by the way, right now, none of that is happening. So, I'm going to appear on CNBC tomorrow to talk about stablecoin. But this is like maybe the first time in maybe 3 months. So they don't call me that often, right? If they start to call me and ask me to appear like, every week, then maybe that's a sign that we're getting somewhere close to what we saw in December 2017.
What are your top signals, Rick?
Mine's very scientific. It's when Min starts buying watches, then I know that I need to sell everything. Not even so, I need to go short. Yeah.
Actually, that's good.
I'll keep you posted.
Yeah. Actually, that's the Stanley Druckenmiller's approach. That if you're gonna be, I mean, like famously in the Black Monday in 1987, he was actually long S&P futures, or Friday of that week, and because he thought the market's gonna go more. But over the weekend, he completely changed his view based on some new information he got. So not only on Monday morning, not only he closed his long position, he actually reversed it and went all the way to short. So within a span of 72 hours, he went from one extreme position to another. And that type of flexibility and ability to kind of, I guess, go for, when you think something is wrong, you change it and you go for the main thing. I think it's very important as an investor.
I guess he also saw Min buying watches, and I think we should we should create like an index for it. We should have like the CCP having a CCTV on his house and let the people know when to short the market. Well,
every podcast, just look out for his wrists and see.
How many watches does he have? How many watches does he mean?
I'm not sure. We'll know soon enough.
It was a good talk today too. I think the most valuable lesson today, we all know what it is. Watch out for watches. And thank you for tuning in, Rick and Peter, and see y'all next week.
Thank you very much.
Bye.
Right.